here right now. Okay, so the other day we were talking about Saylor. We were talking about Bitcoin banks. And I've been, for those who watch the show, you know how much I love Saylor. I know, you know how much I've been talking about him starting a bank, him starting an insurance company, him buying, as of recent, Semler Scientific, things like that. Anything that they can do to produce cash flow, they can put into more Bitcoin that makes sense to them, they're going to do that. And bank, I think, is going to be the first one. And Saylor came out and said that himself last week, that he's going to build the biggest Bitcoin bank on earth. And I don't think that anybody can catch them at this point. They have 250,000 Bitcoin. And once you break it down and see how impossible it's going to be for anybody out there with any amount of capital to be able to get that at this point, you understand how much of a premium that puts on MicroStrategy themselves. Because nobody, in my opinion, nobody is ever going to catch MicroStrategy and Saylor with this. So that's a huge advantage. If you really believe in Bitcoin and you think that it's going to be the next currency of the world, then that's a pretty big deal. The guy who has the company that has the most Bitcoin. So it does make sense. And so this was actually somebody on Twitter shared this yesterday, and I'm going to talk about it because I said this as well. I said that even when they were emailing back and forth between Satoshi, Hal Finney, they were talking about this stuff. They were talking about the future of Bitcoin and what it could look like in 20, 30, 40 years from now. And I said that Hal Finney was a proponent of Bitcoin banks. He said it's going to be necessary. So I want to read you this, and then I want to talk about why this is okay, why this is necessary. So this was an email, or a post, I guess I should say, from Hal Finney back in 2010. So this would have been about almost 2 years after the first Bitcoin block was mined. All right, so this is what it says. Bitcoin Maxi. Saylor's a clown for being pro-financialization of Bitcoin through MicroStrategy and other corporations. One of the original Bitcoin Maxis, Hal Finney, says this. Actually, there is a very good reason for Bitcoin-backed banks to exist, issuing their own digital cash currency redeemable for Bitcoins. So Hal says Bitcoins. I like Bitcoins too. I know most people prefer Bitcoin, plural, but I like Bitcoins. And so did Hal. Bitcoin itself cannot scale to have every single financial transaction in the world be broadcast to everyone and included in the blockchain. Right. There needs to be a secondary level of payment systems which is lighter weight and more efficient. Likewise, the time needed for Bitcoin transactions to finalize will be impractical for medium to large value purchases. Right. So if you think about that, just stop there for a second and think about it like this. People have this idea that we're only going to use Bitcoin, and Bitcoin layer 2 is custodial, so nobody's going to use that. eCash, nobody knows about that. But if you think about like going to a restaurant, let's say that we are on a Bitcoin standard, everybody's using Bitcoin. But if you wanted to pay for Bitcoin on layer 1, this is what it would look like. Waiter brings you your bill with a QR code on there, or however you send the Bitcoin. Let's say you send 50,000 sats for your meal on Bitcoin layer 1. So you scan it, you send it, you set your fee, high priority probably. But even if you set a high priority, you're going to be paying too much Bitcoin for one. And if Bitcoin is really as scarce and whatever. So you're going to be paying a lot of fees for transacting on layer 1, but you're also going to send it. And then before you can leave the restaurant, there's one confirmation on that transaction, you're going to just have to stick around. And even if you set it for high priority, there's no certainty that the blocks come in every 10 minutes. So you could be done your meal, you could have paid in Bitcoin on layer 1, and you could actually be sitting at that restaurant for half an hour, waiting for that transaction, waiting for one confirmation on that transaction. So it's completely impractical. And I don't think anybody in Bitcoin is arguing that now, but I think that where people are disconnecting here is what he's talking about in this next part. So it says Bitcoin-backed banks will solve these problems. They can work like banks did before nationalization of currency. Different banks can have different policies, some more aggressive, some more conservative. Some would be a fractional reserve, while others may be 100% Bitcoin backed. Interest rates may vary. Cash from some banks may trade at a discount to that of others. So to me, that would be like, okay, Saylor Bitcoin Bank of Saylor has 100% Bitcoin backed reserves. So that their cash, the Saylor cash, is going to be worth more because it's 100% backed by Bitcoin. Whereas we launch a Jor coin, a Jor bank, sorry, not a coin, Jor bank, and the coin that I issue from my bank is going to be trading at a discount. It's going to be worth less than Saylor because mine's fractional reserve. I have some Bitcoin on reserve in my vaults, my cold storage, but I'm using fractional reserve lending, so it's not worth as much there. My currency, my token that can be exchanged for Bitcoin, is not worth as much as Saylor's is. So it says George Selgin has worked out the theory of competitive free banking in detail, and he argues that such a system would be stable, inflation resistant, and self-regulating. I believe this will be the ultimate fate of Bitcoin, to be the high-powered money that serves as a reserve currency for banks that issue their own digital cash. Most Bitcoin transactions will occur between banks to settle net transfers. Bitcoin transactions by private individuals will be as rare. Hold on, let me say that again. Bitcoin transactions by private individuals will be as rare as, well, Bitcoin-based purchases are today. So what does he mean by that? He means that the majority of transactions in the future on Bitcoin layer 1 will be bank settlement. So Jor Bank to Saylor Bank. We're settling transactions there. We're okay with waiting however long it takes. We want to save as many sats as we can. So we'll probably set like a low, medium priority. It arrives the next day. It's still much more efficient than the banking system we have now. Some of the actual settlements in the banking system, whether that's on your Interact card or bank to bank, they can take days, weeks, months even, if I'm not mistaken. But with this, you'd be bank to bank, you'd be country to bank, you'd be big supplier to bank, whatever it is. Those would be the people who are using layer 1 to settle transactions. The Bitcoin layer 1 transactions will essentially replace the bank wire as we know it today. So if you're buying a house with Bitcoin, you want to use layer 1. You don't want to use Lightning. You don't want to use eCash. You're going to use layer 1. And you can wait a couple hours or a day for that to settle, but it's going to be settled at that point. And you don't need this bank or the intermediary there or the lawyer or the other lawyer. You just need peer-to-peer. So that's what layer 1 is going to be used for. But what he's saying is that banks are going to hold Bitcoin. They're going to have Bitcoin on reserve. And this is, El Salvador has already kind of adopted this model where they have Bitcoin-backed bonds. And you can see, if you go to their El Salvador website, you can see how much Bitcoin they have. So as a customer of Jor Bank is going to have a website. It's going to show how much Bitcoin we have. It's going to show how much we have on hand and how much we've issued out. And people are going to be able to verify that. And that's why different banks are going to trade at different premiums and discounts, because the ones who have 100% backed reserves are going to be worth the most. And then you can atomically swap whatever token you have for a stable coin, for a Jor Bank coin, for a BlackRock coin, for a Saylor coin or MicroStrategy. You can trade all those back and forth, but it all comes back to Bitcoin, right? And so here's the last thing I want to talk about on that is, like, with Saylor, and I'm sorry I'm not keeping up with the chat here. I apologize for that. It's just I need to be kind of focused with this when I'm talking about it. But the other part of that is, like, let's say that Saylor does have a Bitcoin bank, right? And I know people think that Bitcoin is going to get us away from the banks. But keep in mind that banks are not the problem here. Your local credit union is not the problem in this whole situation. It's not. It goes by the rules and regulations put down by the central banks, the Federal Reserves, the Bank of Canada. They're the problem. And so the difference here between what we have now and where we're going to with like a MicroStrategy Bitcoin bank is the central bankers, they have the ability to control all of this. They have the ability to print money. right? That's the problem. The fiat dollar, given a small group of people the ability to print money, that's the problem. It has nothing to do with your local bank. It's the fact that certain people can print money and devalue your currency. So if you look at what Saylor's would look like, Saylor would not be, he could hold Bitcoin, he could issue cash based on the Bitcoin that he had. You can verify that, but Saylor cannot print Bitcoin. That's the key. Saylor cannot print Bitcoin. And if you think about how the proof of work aspect of this, the only two ways to get Bitcoin are by buying it or mining it. And so far, everything that Saylor has, 250,000 Bitcoin, he's put in the proof of work to obtain those Bitcoins. Nobody issued those Bitcoins to him. He has no ability to print more Bitcoin. Every Bitcoin that they hold in MicroStrategy, they have earned. They've added enough value to society where people gave them fiat, their customers of MicroStrategy, they gave them fiat. They've converted that into Bitcoin. They've used very cheap debt to obtain more Bitcoin. That's a strategy. It's all done fair. He didn't print any Bitcoin. That's the difference between the central banks and a bank like MicroStrategy Bank. He would not have any ability to print Bitcoin. They can manipulate, and I'm sure that there will be bad banks out there who offer, high rates. They're very fractional. They're, very weak on the asset side compared to the liabilities, and they'll fail. They might say that they have a bunch of Bitcoin. They might not put their balance up on a website, and they will fail. But the banks that are honest, the banks that are transparent, and that you can actually verify, they will succeed. It's going to be exactly like in the 1930s where banks held. This is a perfect analogy of it, right? Think back to the 1930s, before they confiscated, before they defaulted on their debt. What you would do is the banks would hold gold in their vaults, right? Just like they're going to hold Bitcoin. It's the exact same thing, except this is even better. Because back in 1930, the banks, they had gold in the vaults. Some of them did, some of them didn't. There was no way to verify that. Unless you had a camera of your piece of gold that you deposited for banknotes or e-cash in this case, you could not see how much gold they had in there. There was no way for them to verify that, customers. Whereas with Bitcoin, you don't need a camera in there. You don't need to trust them. They put up their website, they put up their address, just like El Salvador has done, and you can go verify that yourself. So it's going to be like even 1960, like the world went to shit in 1971 when we went completely off the gold standard. But think about how good things were back in the 1880s, 1890s, early 1900s, before this centralized Federal Reserve bullshit was created. We're going to go back to that exact same time, except better. So that's kind of the message I want to share, because I think that a lot of people are not making that connection to it. They think that Saylor having a Bitcoin bank is somehow a bad thing. It's not. It's what has to happen here.